Well, hello everybody, welcome back to another Forex market analysis session. My name is Alexander Nikitin. I am a professional trader and a programmer as well. If you guys are new, what I'm doing here, I'm looking at some good opportunities that might happen next days, as well as I'm explaining some aspects of technical analysis and psychology of trading. Well, if you guys are following me for a while, I want to say thank you for your support, thank you for your thumbs ups. Thank you that you shared this video on social media. I really appreciate this work. Okay, let us start, and today I want to reveal my technique of swing identification. This is a very interesting technique. I never heard it from anyone on the internet. I created it myself. So keep an eye on this. If you like it, please comment. If you dislike this, please comment as well. Let us start then. What is this swing identification technique? Well, first of all, I divide all swings into three types. The one swing that violates previous high, for example, it is a high. What I mean of violates, it means that it closes above the previous high. So it is called an impulse. Another swing that goes within the range of the impulse is called a correction. Yes? So this is a correction swing. And there is a special set of swings that are not going outside of the range and that are not going inside of the range. They are touching the bodies of the previous impulse or previous correction. These swings are called retests. So what is the retest? It is actually the swing that touches the zone between the highest close and the highest high, like this, and then it goes back. So this is a retest swing. We can have a spike higher, but we shouldn't have a close above, because in this case it turns into what? It turns into an impulse, violating the previous high. But as we don't have a close above, but we have a spike somewhere inside of this zone, touching this zone, then it is a retest. We can have it also this way. Just imagine that it goes to the downside, touches the lowest close, and it doesn't close below the lowest low. So somewhere here it is a retest. Actually, a retest is a deep correction. It is not an impulse. It doesn't show any direction. It doesn't give us any trend confirmation, trend reversal, trend rotation. Only impulses do. And these impulses are separated by corrections and retests. So if we have a trend, so actually we have an impulse, a series of impulses that have corrections or retests in between. The perfect trend is an impulse, correction, and impulse. Our downside trend is an impulse, correction, impulse. But sometimes inside of this we can have retest, 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 and then we have this. So all this area will be considered a correction, because we have a correction and then we have retests that are actually deep corrections. They are corrections, but they have also a feature of an impulse, because it establishes a new range. Because we can have a correction if compared to retest. We can have a correction. We may have a pullback of an impulse, and we may have a pullback of a retest. Okay, hope you understood that. Hope you written it down. Let's go into charts. Okay, as we know that markets are broken. Markets trends, yes, those movements, trends, they are broken by corrections like this. Boom. Broken by correction. They are not the movements that are straight, they are broken, they stop, they have pauses, so these are corrections. We are to pay close attention to correction. So what a valid correction should look like? First of all, let's consider the structure of correction. Let's say we have a bullish candle, then we should draw it from the low to the up. If we have a bearish candle, we should draw it from up to low. So this is it. A correction should have a zigzagging structure if we draw it this way. Let me explain it here. Okay, we have a kind of impulse. We have a kind of impulse here. Obviously it is an impulse because we violate previous impulse high. Yes, and we had a correction here. I will explain why we had a correction here on this. So this is a potential correction. Yes, let me zoom it in and let me explain the structure of correction. Let me take that arrow. Okay, from this to this, where the price moves, it moves here. Oh, sorry, not here. How can I delete that? It moves here and then it moves here. Why it moves this way? Because our green candle starts from down to the upside. Simply don't pay attention to closes and opens, it doesn't really matter. Then it goes from here and red candles move opposite. They move this, 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 this. Just uniting highs and lows, nothing else. So if you have a green candle, you unite low and high. If you have red candle, you unite high and low, and then you do the transition between candles according to their price action. So if you have two green candles, then the transition is this diagonal. If you have green and red, then the transition unites the highs. If you have red and green, then the transition unites the lows. So now you are looking at that zigzagging structure. So we have a low, we have a kind of correction, and then we should have a lower low. Yes, we had a lower low. So this is called a valid structure of correction. If you look here, we also have a valid structure of correction here, like this. Agree? So this is a low, lower high, and lower low. So this is a valid structure of correction. Okay, and the second theme of that correction calculations is not only to have a valid structure, but also to have a size of correction. Now you should be very, very attentive to what I say, because the size of correction is very important. You should calculate in somewhere obvious part of the market, something like this. Three correction ranges. Okay, price range. It is here. Number 1, number 2, yes, and number 3. And then what you are to do, you are to calculate the average of these three. Okay, what is that? 55.2. You can see the numbers. 55.2 plus 84.5 plus the last one 53.1. 53.1. Okay, and we should divide it by 3. So from now on we know the average correction size. So my correction is considered valid if it has a valid zigzagging structure and it should not be less than half of average correction size. Average correction size I have abbreviated as ACS, average correction size. So the correction should not be less than half of average correction size. So we should divide it by 2, and this should be 321. Let's measure this correction. Boom. 53.8 easily. Then we should take the next 3 corrections, 1, 2, 3, and recalculate that average correction size. Okay, 84.5 plus, what was it, 53.1 plus 53.8 divided by 3, it equals the full correction size, 63.8, and divided by 2, it is half of ACS, 31.9. Okay, let's measure the next correction. It is easily, we have 50. Okay, 50 plus 50 plus 50, it is the average is 50. If you divide it by 2, it will be, what it will be? 25. Okay, let us measure if the next correction size is 25. Okay, it is 30. So we should not skip that. We should not draw the swing like this way. We should draw it this way, then we should draw it this way, then we should draw it this way, and then we measure that correction. Let's calculate, what is it? 19.8. Let's see if 19.8 is good. We had 30, we had 50, and we had 53. We should divide by 6 and should be 22. Okay, this 90, 30, 90 something is not valid. So the last swing to the upside was this. Okay, that's it. So what is the correction? You should understand the rules. When you have a swing to the upside, actually the correction is a range that is within this swing. If it goes deeper, violates the swing here, it is not a correction anymore. If it closes below, then it is a retest. If it doesn't closes, if it closes below, then it is an impulse. If it doesn't close, then it is a retest. If it is somewhere within this range, it is a correction. So you are to look at those ranges of previous impulse range. Okay, so let's go into the markets to do some analysis. Okay, as I told you, I am a programmer as well. I'm not doing it everything manually, so I have coded some programs to assist. Okay, so we have a pound dollar. This is a daily time frame. How I start my calculations. I'm not going deep into history to draw those corrections and impulses. I start the drawing from whatever I see. Okay, I see this movement to the upside as the beginning, then I see this movement and I understand that it touches the lowest close, so it is a retest movement, should go back. Then I see the movement to the upside and it touches the highest close, so it is a retest movement as well. Then I see the movement to the downside like this, and after that I see only single red candle. It cannot be a valid correction because of structure. Structure should have zigzagging correction, so I skip this correction. After that we have a violation of that structure to the upside, false breakout, and then we have it two taps. So the first valid structure is this. If you draw the candle from low to high, back to low, and another high, you will see the two ascending highs followed by ascending lows. Yes? Hope you understand this. So you are to draw that correction with rectangle. Then we have another impulse, break and close below the previous impulse range. Then we have what it is called a retest because we touch the zone between the highest close and highest low of the previous impulse. Okay, and here we have another retest. Okay, what do we have here? We have another retest. Oh, sorry, forgive me. I skipped that. I do sometimes skip some things. But in our educational purposes, you are to draw this correction first. You see this green candle, then we went a bit higher, putting a lower high, and then we went a bit lower, giving us a lower low. So high, low, lower high, lower low. Then we had a retest of this, like that, yes. And then we had a violation that confirms the movement. After that, what is the first candle that violates? It is here, so we have to draw that impulse to the upside. And what happened next? We had a violation of this. Okay, how will you call this formation? If you call it a downtrend, no, it is not. The downtrend was here. We had an impulse, correction, and another impulse. Even here, after we had that retest, we still were in a downtrend mode. But then we had a retest, a violation to the downside, it was a downtrend mode, and then we had an impulse to the upside. So the downtrend stopped after this. We had an impulse to the upside. This is the same thing as I told you in the beginning, that a retest has a second feature. They install a new range. The first range was installed by this movement, and this retest installs a new range, so we're no longer are looking for this structure, but we are looking for that structure that is closer. So this was an impulse to the upside that stopped the downtrend. After that, we could have both, either continuation to the upside or to the downside. We had a continuation to the downside. This is the first impulse to the downside. After that impulse, what do we have? Valid correction. No valid. This one is valid. And after that, we had a retest to the downside. Downside, yes. Since then, we are trading within this retest range. We don't have downtrend yet. We only had one impulse. After the stop, we had one impulse. So we need a confirmation to the downside. Okay, we have retest, we have a correction to that retest, and if we have an impulse to the downside, it will be what? It will be a confirmation of a downtrend. If we have an impulse to the upside, we will have a bullish rotation. Okay, from now it is consolidation. It is nothing, no trend here. Okay, these corrections were obvious, so we didn't have to use our ACS tool. As you might have noticed, I just double click and it appeared here. When we have consolidations, what consolidation brings? It brings multiple patterns. So here we can find some patterns starting somewhere within this range. It is very good to trade patterns here. Okay, let's go for our. We had a movement to the upside, so I don't actually see what was this movement. The first structure, correction structure that is good is here. We had some upside candles, then downside, and another upside, so it gives us ascending highs followed by ascending lows. Then we have a retest. We don't have a candle close below that. Okay, then we have a bullish impulse. So whatever was it, maybe it was a downtrend, it stopped with this impulse to the upside. Then we had a continuation to the downside, and then we had to the upside as well. Okay, this is a valid correction according to its structure, so it should be marked. Then we had a movement. According to this structure, this is a valid correction as well. So from now on we have 3 corrections, and now we can follow the average correction size, the ACS. Why do you need full correction and half correction? Sometimes the market movements are very strong and you are to start from the very beginning. That's why you will need the full correction. Okay, uptrend here, then we go to the downside. Do we have an impulse to the downside? Yes. And after that impulse, what do we have? Another impulse to the upside. So this impulse was a false breakout, then we had another breakout to the upside, and that second was a false breakout as well. Okay, after that we have this. Let me calculate correction size as well, so it stays the same. Okay, since then we are not touching any of these bodies. So let me mark the highest close of this, let me mark the highest close of that. So actually we are consolidating within this period. So until either of these bodies touched, if this body touches, then it will be considered a retest or an impulse to the upside. If it goes to the downside like this, then this whole price action will be considered a correction, and that will be a retest or an impulse. But for now it is nothing, it is moving sideways, and the previous movement says that uptrend stopped uptrend stopped by that downside impulse, and we had an uptrend resumed, but it didn't continue. We had an uptrend stopped again, so we are neutral. Let's go to 1 hour then. Okay, we had some movement to the downside here. Let us draw that. Don't miss those candles, try not to miss that. We have those, we have this. Okay, this is a red candle, so we have ascending highs followed by ascending lows. It shouldn't be skipped. Okay, what we have here, we have this, then we have it a bit lower. Potentially we have that smaller correction as well. At least the structure of that correction is good. And now we have a trend. This was a first impulse, this was a retest followed by correction, and then we finally had an impulse to the downside. So actually this correction, retest, correction, they all form a correction, because a retest, as I told you, is a deep correction. Okay, let's go next. What is the first to violate previous high? This one, but it wasn't followed, it didn't follow, well, so we didn't see any good structure, so we have to skip that a bit higher. This is not a correction. One candle, red candle, cannot give us a good structure. Okay, another correction here. It looks this way. Well, it was not a good correction. Well, what I am to do, I am to go a bit deeper. This way I need an ACS this time. We had a correction here, we had a violation here. Okay, nothing here. We had an impulse here, need to delete this. We have a correction here, and now we have to calculate the ACS. Why do we need the ACS? Because of this large movement. If this movement goes this much to the upside, then this to the downside is all a correction. All a correction. And it will be very rare cases that you will find some good opportunities for trading. Okay, let's calculate. We see the 388 is the full correction size. If we measure that, we have 527. So we have to start from the very beginning, starting from this. From this large impulse, we are starting another movement. So this gives us a good correction, this gives us a continuation. We have a downtrend. Okay, nice. Then we had what? We have a correction followed by a retest. Actually, we are still in that downtrend, but here we broke to the upside, we broke the retest. We don't need to break this first impulse because the retest installs a new range. So we have broken the retest. It means the downtrend stopped. After that we had what? We had a retest as well, but before that retest, let me calculate the average correction size. We probably had this a valid correction. Yes, 330 is good because it is more than 291. So we had this correction, and then we had the retest. and then we broke to the downside like this. Boom. What we had next? We had the correction of this valid structure, but let us measure. What was it? 249. 249 gives us this. $244? No, it's not valid. So this movement is filtered by ACS. Let's go next. Boom, broke into the upside, and since then we do what? We did that correction and then we broke to the upside. But I would invert that one more time. 498. If this correction is good, 498, 572. Okay, that's good. Because I want to keep my ACS smaller. I don't want to be it large, because it will do what? It would filter everything. If it is pretty small, then I meet my good opportunities. Okay, what do we have here? Do we have anything here? No, nothing here. So the first movement that touches the highest close is this. Then we had a movement that touches the lower close, this. Then we had what? We had a correction, judging by structure. 256 should be the smallest size, and it is 257. Well, let us see. Let us be more precise. 256. 253. It says that rectangle says it is 253. $249, 252. No, it is filtered. We don't have correction here. Okay, we don't have correction here either because we have wrong structure. We don't have correction here either because we have wrong structure, a low, then we have high, and we don't have a lower low. So what is the next high? The next high is here. So what we have to do? To draw this. After that we had a correction and we had a retest. Okay, so what are those retests? They are actually double tops, double bottoms. So breaking the neckline either stops the trend or it gives us some counter trend opportunities. Okay, for now we don't have anything, we have only a retest. If we break to the upside and close above, then it will be a good opportunity to go higher. Okay, let's go next. What is it? 15 minute is my next time frame. Let me draw some corrections. We have it here, valid correction. If you have two candles of the same color as correction, it is obviously good structure. You don't need even to check it. Okay, 3 corrections done. Now we can calculate the average correction size like this: 243, 122. So what is the first candle to break that? It was this. After that we moved to the downside and then to the upside. Here we have an interesting situation. It was this way, then it was a correction this way to the downside, and then it was a retest to the upside. One candle retest, easily we can have one candle retest easily. Okay, after that we had a correction of this, and then we had a trend installed to the downside, small trend installed to the downside. What we had next? We had a retest here. Did we have a retest here as well? Yes, we had it here. Okay, then we had a correction of this. Let me recalculate that. 126. I see that we don't move smaller than average, so we're still in that average mode. I'm using magnet mode, by the way, so my drawings coincide with highs and lows. Okay, it's not a valid structure, I suppose. This candle is, the close says 25,103 and the high says 25,160. So it is a green candle, it is not a red candle. If we don't have two red candles, we have to skip it. Look here, we didn't have any correction here. We didn't have an impulse here or a retest here. So we have to wait until we have a lower low. The first lower low appears here, but look, between this low we had a higher high. So we have to stretch it this way. This is a single movement. After that, what do we have? A correction. 171, it is obviously more than average, and then we had a retest this way. Okay, this is the swing analysis. Let me draw it. We had sideways movements on 4 hour. We have not yet installed uptrend on 1 hour, and we don't have an uptrend yet on 15 minutes. Don't have it yet. But if we go higher and close above, then we will have some movement. Just imagine that we have a high, and then potentially we have that kind of zigzagging correction. Yes, and that will bring us what? That will give us patterns. Empty space, sorry. It doesn't draw here. For example, we have it here, then we have it here, here. Okay. The time, it doesn't exist yet. Okay, so I drew that pattern. So what do we have? We had this and we had this. Well, that's it. Nothing on pound dollar. So the analysis is done. Let us switch to some other pair. New Zealand dollar. Okay, daily time frame says that we had a correction here, valid structure, then we had a break to the downside, not valid. So this way, correction here, oh sorry, impulse to the upside, correction, confirmation of an uptrend. Okay, retest, a continuation of an uptrend, another retest, another continuation of an uptrend. Here we have next a correction of this. Calculating this, 1000 is average. This valid structure. Do we have 1000? Yes, 1700. Okay, going next. Let us see the retest. This one is the first that touches the lowest close. So let us see if we have this structure. Yes, we have a structure. Let's calculate the average correction size. 891 easily, 1122. So we shouldn't skip this, and since then we are moving in a downtrend. After we have that downtrend, what we have else? Calculate this. 1540. Do we have this 1540? 1580 easily. So we are to draw an uptrend here. This way. After that we have a violation to the downside. We had a correction. Then we have another violation to the downside. So the downtrend confirmed. And after that downtrend we had a violation to the upside. So the downtrend stopped. Since then we need a confirmation. What are the confirmations? Either we confirm a downtrend, so this previous downtrend is continued, or we confirm an uptrend, so this impulse turns into an uptrend. We have a correction and then we have a continuation. Right now we're moving in that indecision. Nobody knows where it should go. Okay, what do we have here? An uptrend on 4 hour. This way. No retest. It was a correction. Didn't touch the lowest border. Boom, we have a higher high. Okay, actually I am to draw it this way. So we had the correction. Then we had the retest followed by retest and followed by a continuation. So those retests do not harm that trend. They do not stop it. Only an opposite impulse can stop the trend. So retest, they the same as correction. So you should keep it in mind. That the trend resumes after a series of retests. As we see it here, it resumed. Correction, obviously. Okay, let's first calculate this. The close says 72.28.9 and the open says 72.29.5. So this is a red candle. If I zoom it in, maybe now it is green. Okay, the close 72.28.9 and the open 72.29.5. The open is higher than the close, so this candle is red. 72.29, 72.28. Close is lower. The candle is red. Yes, now I can see it is red. Okay, so what ACS says? It says that it should be at least 45.5. Let's measure that 45.5. It is 56.4. Valid. We shouldn't skip it. Then we go next. This way. Okay, we have correction here. It is valid because it is of the same size of the previous correction. Uptrend continues. When price is trending, it is like a tendency. We move to the upside, to the upside, to the upside until we actually install a downtrend. Until we start moving to the downside. Okay, so that was a correction and retest and another retest to the downside. If we touch the lowest close, questions. Close 72.45.0 and the close low here 72.46. Oh, it is higher. That's not a retest. It is a correction. But this is a retest and we had that correction. Yes. Let us see 42.0. Calculating that. 46 easily. Boom, uptrend continues. So when you draw those swings, you can apply whatever swing trading technique, something like those pennants, like this. You can see the pennant as it broken, went to retest, and then it goes here, something like this. Yes, another pennant when you have a series of retests with corrections. Yes, like this. As you know, when is pennant or flag, I don't know how the ascending triangle, maybe. What is this thing? You just have that impulse followed by correction, retest, retest, and then you have another impulse. You have that candle close, then you retest, and boom to the upside, boom to the upside, boom to the upside, and so on and so forth. So this one was invalid. Triangle, retest, retest, retest. Yes, then we broke, and that was a false breakout. Actually, here we had 3 winners, and then we had 1 loser. I'm not actually a trader of those, but it is a good swing trading technique. I'm using advanced pattern trading techniques, but if you trade those pennants and flags or whatever, it goes very well. But it all starts from the swing identification technique. You are to know how can you draw the swings, or you are to have the rules that are objective. Easily the size of correction meets my criteria of being half ACS. Okay, this one, red, green, red. Okay, high, higher, high. It can be, the structure is okay, but the size leaves some questions. 30.42 and we have 31.9. Well, ACS becomes lower, it becomes smaller. Then we had a retest, then we had another retest like this, and then we have a continuation, break and close below the previous. Then we had this correction. Obviously it is a valid correction because even this correction that was much smaller was okay. Then we have this, no border is touched. Then we have stopping impulse upside that stopped this downtrend, and then we have this. Do we have a continuation of the downtrend? Okay, the low says 71.33.5 and the close says, come on, 71.33.5. The close is at the same level. It's not an impulse, it is a retest. We don't have a lower close, so we have equal close. It is the same. So this is called the consolidation. We are moving sideways. So pattern traders, don't forget to find some patterns somewhere here. Maybe you can trade it this way. Maybe you have something of this. Boom, boom, boom. No, nothing. Let me draw the last swings. Okay. Actually, when you have a consolidation, it is trading within some range. This is the range, and it can be trading for a long period of time within some range. And in this range, multiple patterns appear. Advanced pattern formations. Okay, let's go next. Hourly. What hourly time frame says? We are going this, then we are going here. Obviously, then we have nothing. But I will mark that here because I see it is being at least one ACS. Don't have questions, just go a bit deeper to calculate the average. Let me delete this for a while. ACS tools 40 and 4. If we have 40 and 4 here, 4018. Yes, we have it. So my eyes are pretty good, so I trained them a lot, so I can recognize the correction without even calculating it. Okay, so the first structure is here. It is good, 2 red candles. We should have it 203. What it says? 18.4. The second number right to that cross, 18.4, it shows the range. Should skip it. Okay, do we have 203 here? Easily. So we had a correction. This means we had a correction. Then we had a retest like this. It's called a double top. Then we had a break. Those 2618 traders hop on that trade to the downside very well, moving this way. Boom. No valid structure, but let's see the size. 19.2, 14.4. So we have this high, low, boom, high, easily. Good structure. Let's calculate that. 15.6, we have 19.2, no, filtered. ACS filtered that noise, and now we should have it. 19.2, yes, 21.2. This is a valid one. Going next. So trend is to the downside. Recalculated 303 is again that ACS. 303 is full. 301, no, we should skip this. So the next one is here, half, 15.5. I can say it is okay. 25.5 is good. It is obviously more than 15.5. Correction, impulse, okay, another correction, and we have another impulse. And here we are, guys. You can see it is an uptrend. Let me zoom it in. Okay, it is an uptrend. We have an impulse. Since then, we are moving within this correction. Okay, what we are to do? We first need to stretch that movement to the downside. You see, as price goes in this rectangle, this is our buying zone. So you have to find some reasons for buying. What are those reasons? Maybe you will have a double bottom, maybe like this, double bottom, and then you will have a break of that or whatever. Or maybe you will need to wait until the candle close above the high, or maybe you will look at some doji candles or whatever price action, or maybe you will use the advanced pattern formations that I personally use. Okay, first of all, we need to find our ATR. This is our ADR. I'm using ADR 14. It says 9.6. The ADR is 9.6. If I stretch 9.6, 9.7. Okay, so it gives me 71, 78, 9. Then I stretch my fibs this way. 71, 78, 9. 78, 9. It is 1 ATR below. So this is my ATR, and it gives me this 50% range. So it tells me if I buy it higher, I won't have a 1-to-1 risk to reward because my target should not exceed the highest close. So my killing zone becomes a bit tight. So let me place this correction back. Okay, what is it? And let me draw a separate rectangle for that this way. So this rectangle stays for my killing zone. I will color it different. Crimson maybe. Salmon. Okay. So somewhere here, do I have something that completes here? Well, yes, I do complete something. Let me do it this way. Let me draw it this way. I think we have a potential bad pattern setting up. Yes, we have a bad pattern setting up. I will aggressively enter here. I won't wait for any double tops, double bottoms, high, 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 close. If price goes here, I will enter this. But I will modify my targets a bit and my stop loss. So instead of having that 113, I will have a 180. 71, 79, 8, 71, 79, 8, and my target this will be 72, 34, 9, 72, 34, 9, this way. I don't need this target anymore. Oh. Okay. I don't need this target anymore. So this is the way I trade. What I'm to do? Well, let me place some trend. For example, this one micro lot. Okay. Let me put it. I want to show you how I do the trading. I run my pattern trade, and it is asking me for how much I'm going to risk, and I say, okay, let it be one micro lot. And then I press OK. Boom. You see, it appears. Why it is a bit higher than the entry? Why this a bit higher than the entry? Because of spread. Actually, when price touches this, the ask line will be here a bit higher. You see, the ask line is red, bid line is black. So as bid price touches this entry, the ask line should execute the long trade. Okay, I'm risking something. Risking this, generating $3, $4, risking something like that. Well, we found the pattern. Okay. It is also seen on 15-minute, because 15-minute looks almost the same as as hourly, sorry, with some small exceptions maybe. No trend here. Continue this, have this. Okay. The high says 72, sorry, 72.14.4, and the close says 72.14.5, so it doesn't touch the highest close. Well, actually we have it the same way. Boom. We have that potential bad pattern the same way as we had on hourly. Okay, so this is my screen, what to look for. So if I switch it to, I have all pairs, these are all my pairs. I have them all analyzed already, so if I switch that, I have something that is setting up, something that is not setting up. So you see my potential initial kill zone here. Maybe something is good, maybe something not good. Euro, GBP also setting for a pattern, continuation, and so on and so forth. So hope you understood the idea how to go that into trading, the whole analysis, how to find the trend, what is a trend, how to draw the swings, and how to find some good trading opportunities. The main reasons for me, the valid pattern for me is that coincides with the trend. I am calculating the trend, and only then I look for a pattern. I'm not trading all patterns, bearish, whatever, that are counter trend. I only trade as trend continuation. Okay, that's it. Hope you like this. If so, give me your thumbs ups, follow me, on Facebook, on TradingView. What else do I have? I have a Twitter. Then subscribe to my next videos. Until then, I wish you good luck in your trading. Hope to see you soon.